Hello and welcome to CI Live. I'm Aiman and alongside me is Izzah. We are agricultural analysts in the S&P Commodity Insights Asia Pacific Crops team. Today, we will be discussing the Lauric Oils market, focusing on palm kernel oil or PKO and coconut oil or CNO. Lately, we've been seeing a divergence between the price of these two commodities.
You're right, Ayman. The two markets have started to diverge lately, with coconut oil moving lower, but still within the higher range, while palm kernel oil price has been showing more strength. Could you tell us more a bit about what's the trend for PKO price?
Of course. So recently, we've been seeing PKO price edging higher. The average for the first 25 days of September reached about 2,084 US dollars per metric ton. So that's nearly 3% above August. The increase was mainly driven by stronger export demand. Now, what about CNO prices, Isa?
For CNO price, we saw it coming off the record highs. This month, the average coconut oil price fell to around $2,600 per metric ton. That's about 7% drop from last month, but still above the historical average.
That kind of move means CNO's premium over PKO has narrowed to roughly $500 per metric ton.
Exactly. And the main reason for this convergence is driven mainly by sentiment following the sharp fall in copra prices that we've seen. So dealers rushed to sell, and some crushers were able to move volumes of discounted coconut oils, which were then sold immediately. But beyond sentiment, supply issues are also at play, and we'll get into that in just a moment.
Yeah, so sentiment has been playing a large role, and that sentiment is driven by market expectations that supply isn't going to bounce back anytime soon.
Right. Let's dig into the supply story for each oil. So what are we seeing for PKO markets?
So basically, the PKO supply story, particularly in Indonesia, has been seeing higher than expected seasonal gains. We've actually revised our outlook in reaction to this, raising both PKO supply and consumption figures for both the current and next marketing years. Assuming similar yield levels to the past couple of years, there's reason to believe that a significant increase was seen in mature planted oil palm area within the country. Indonesian PKO production rose to a record of approximately 493,000 metric tons in July, which vastly outperformed expectations.
That's a big jump for Indonesia, and it really highlights how strong PKL output has been there. But of course, Indonesia isn't the only story. Malaysia is another big player in this market. So how do you think Malaysia is shaping up?
Malaysia's picture is a bit more nuanced. We saw a slight decline in August PKO output, down about 4.4% from July. This came despite higher palm kernel production, which tells us that kernel crushing actually slowed amid ample domestic palm kernel oil stockpiles. This month, stockpiles still managed to edge up 1.5% at the end of August, as the absolute output volume actually overtook the combined monthly exports and domestic consumption figure.
So Malaysia's numbers are softer compared to Indonesia's surge. But when we look at the trade side, we've been hearing that exports have been more active. Can you tell us a bit more on what's actually driving the demand for Malaysian PKO?
Demand has shown relative strength. So, based off of Malaysian Palm Oil Board data, we saw a 22.9% surge in PKO exports for August. A lot of that was likely driven by the tightness in CNO markets. Would you care to explain a bit more about how supply is doing in those markets?
Definitely. The CNO market is facing supply constraint. In Indonesia, coconut oil export dipped to a 5-year low in May. So this is a direct result of poor harvest following the lingering effect from the dry condition that we see during the Q4 2024 El Nino. And making things even worse, raw coconut in Indonesia surged. The export surged about 43% year over year in June, so leaving fewer coconuts for domestic crushing.
I see. What about the Philippines? It seems they're facing their own set of issues.
Yes, they are. The copra crush margin in the Philippines has raised to record levels, but that's mainly because domestic coconut oil price have surged faster than copra price. And at the same time, supply has been under pressure as well. There has been heavy rains, which has slowed the drying process, so less copra is making it to the market. And farmer selling has also dropped off sharply after the earlier price swing that we see. So now we're left with crushers short of copra and they're struggling to keep up with export demand.
Yeah. So with crushers struggling to secure enough copra, what does that mean for the outlook in the upcoming months?
There hasn't been any real improvement in the supply yet. Farmer selling has stayed slow and crushers are still short of copra to meet export. But people had been expecting production to pick up early in quarter four. But so far there's been no signs of that. And local market participants are now saying that recovery may only come at the end of quarter four. And even then it's likely to be less pronounced than what we originally hoped.
With all of that as a backdrop, let's discuss our forward-looking view. Iza, what is our overall outlook and what are the key risks that we're flagging for the market?
Our core outlook centers on the price spread. We think that premium of CNO over PKO is likely to stay around current levels through the rest of the second half of this year. But that's because of the issue we've been talking about, the ongoing worries over CNO production with the weather in Philippines.
Yeah, and while PKO producers have already moved past their seasonal peak,
You're right. And on top of that, there has been an important policy shift. So Philippines has confirmed a delay in the B4 and B5 biodiesel mandate, but at the same time, production has taken another hit. So most recently, what we've seen is their super typhoon Ragasa. This has caused severe damage to coconut areas. So on one side, we're seeing weaker production and storm damage, and these are keeping the upward pressure on prices. And the mandate delay is, on the other hand, pulling the prices the other way. So overall, we think the supply issues will outweigh the mandate delay, in which we think will keep CNO prices supported. But Ayman, what do you see as the main risk that could shake up this outlook?
we see risks on several fronts. First, there's a slight downside risk to the overall tropical oil price complex from weakening demand. Demand for Lauric oils has shown some softness compared to what we saw in the first half of 2025, and this is compounded by reports of stagnating demand for oleochemicals in Southeast Asia, mainly due to growing domestic oleochemical capacity in China, which is a key export destination that can pressure processor margins and reduce their appetite for feedstocks. And the biggest risk seems to be from the CNO supply side itself.
Absolutely. The uncertainty around when the production will recover keeps the market on edge. And if the rebound takes longer or turns out weaker than expected, supply is going to stay tight into next year.
And for the Philippines specifically, the risks are even more immediate. So, to bring it all together, our view is that the market remains sharply divided. PKO is well supported by strong demand and a stable supply base, but CNO is grappling with a myriad of production issues, from lingering El Nino effects, which are delaying its recovery and keeping its premium stubbornly high.
That captures it perfectly. So the two markets are currently moving in opposite direction right now.
It's definitely a fascinating and challenging market to navigate. That's all the time we have. Thank you so much for joining us at CI Live. If you like deeper insights, don't forget to check out our latest Lauric Oil monthly report. It's packed with short-term market forecasts and market updates in the Lauric Oil space.